Hello, everybody. I'm Trimbark Tree, and welcome to Wall Street Raider. Okay, well, the game has finally released onto Steam Early Access, and if you didn't know, this is a game that's been around for almost 40 years, and I've been playing it for, over 20. But it has never looked quite as good as this, because this is the new updated Wall Street Raider version 10 with a beautiful new UI. It doesn't look like a glorified DOS game anymore. No shade to the original Michael Jenkins, who wrote the original game. This game, if you haven't seen the video or watched the story, basically there is a game from 40 years ago, which is the greatest financial simulator of all time, and it is incredibly in depth, but the UI was very old school, and a new developer came along and decided he was going to save the game from becoming abandonware and update it for the modern century. And it looks so much better, and I am excited to share it with you guys today. Okay, but before we move on, I want to just start with the obligatory. We are on version 10.21.4, and I am using a mod which changes the game company names to real-world company names. So if you're interested in that, or if you're looking for more information about the game and just need some help, I would highly suggest you check out the Wall Street Raider Discord, or check out the wiki. I believe there's a link to that somewhere as well. Now, let me tell you about my plan for today. If you saw my previous videos about this game, and they were in a different version of the UI, but it was the modern version. I had some. I went back and rewatched those, and I had some really good strategies, and like I was having a lot of fun. Unfortunately, the save doesn't work for me anymore, but the one thing we never got to talk about, and what I really want to do this time, is to tackle this big, huge black section over here. I want to become a new financial empire, and so that's going to mean starting or buying a bank. That's going to mean starting an insurance company, and possibly manage some ETFs. But that's kind of a long ways down the road. We need significantly more capital to get there, because here, we'll go back to my overview. I have a a tidy sum, a nice small loan from my parents of $1 billion. But if you saw some of these market caps, you will see that $1 billion does not go very far. And we need to figure out a good way to make some money. And so we're going to just do that by walking you through sort of the standard steps of a new game. And we'll hopefully be able to make a bunch of money right away. And there will be much rejoicing. And then we can work our way into our financial empire. But if you guys saw, I started with the notification that we got. The Federal Reserve ends its tight money policy and lowers rates. At the start of every game, you're going to get a notification about which way interest rates are heading. And as you can see, we got the long bond here at 7.38, the short bond at 5.22, and the prime rate at 7.89. Now, if that means that we're going to lower rates, let's start off with a little financial lesson right here. With bonds, lower rates means higher prices. So we're at 7.5 here. If we go in and we go to buy, here it says the price is 109.01. So it's already 9 over par. But if we buy and the price goes up, which it should, because the interest rate's going to go down, prices should go up. I think this might be a good, safe way to make some money while we wait around for the first month of the game to clock by. Because here's the thing. The game needs to run for a full month before there's an event that happens that recalculates the stock market index, and it allows you to finally trade some futures on commodities here, because right now if I want to go and buy corn, for example, or buy some gold at that insane price, I'm just seeing that, I can't, because we haven't had a month go by. I would love to be buying oil at $52 a barrel. Doesn't that sound nice today? 46 a barrel. Yeah, so generally the way I play is maybe high risk early. You know what? Get your bankruptcies out of the way early. And hopefully that doesn't happen to us today specifically. But if you're gonna do it right at the start so you can restart. and then you can start with a lot of money. So I like to go all in on commodities, because it's a great way to just rocket your net worth up, and you can be into the banking game in 2 months if you are willing to take the risk, which generally I am. But before we get to that magical date, I would just like to stop and point out the long bond has fallen 2%, and our investment, let's see, we're going to go to our holdings here. Our investment of $2 billion has turned into $2.5 billion, which has pushed our P&L, our net worth up $500 million. We just got to sell this, pay our loan off, and we should be good. Oh, we lost a little bit there. Oh no, I'm not going to worry about it. Now, I do want to talk about just some game settings. If it's your first time playing, some stuff you might want to turn on. Don't worry about all this stuff. I will say turn off autosave if it's already on, because you're going to want to be able to just save the game at parts where you have a lot of money. And then if you go bankrupt shortly after, you can just revert. So, pro tip, make multiple saves, at least while you're learning the game. Eventually you can go into Iron Man mode if you want, but at least for your first couple times, make multiple saves. Just learn the fun way and not the painful way. Not the smashing your finger with a hammer way. You don't have to do that. Okay. I would turn on sweep, and so the way sweep works is it automatically pays off your debts and invest your extra cash into T-bills, so you get a little bit of interest. I would just turn this on. This only works for the player. This does not work for your companies. And then I like to turn on locked denominations. That makes these graphs a little bit more readable. And of course, send crash reports. That helps the developer. Please do that. Okay, so we are almost to the end of February. Okay, and I'm feeling pretty good about this net worth. If oil kind of sticks around there, or maybe like falls to 45 again, that'd be really nice, because I think I can turn this nice. Okay, so here's the pop-up: adjusting the stock index divisor, continuing momentarily. I would like to possibly try to cash in on some commodities. And now our month-long wait is over. Let's go ahead and pause, and I'm going to take my own advice, and I'm going to save the game so I can come back here and pretend like my future bankruptcies didn't happen. Okay, so now we've got it saved, and pro tip, you can always just hit Control-S to save if you're in a good spot. The game is random, so if I save and I play a month right now, whatever happens in that month is not going to happen if I reload the save, right? So you can try to cheese things, but you will never get the same. Like if oil's falling in your version, in your month, and then if you reload it, it might be going up, and so you can't just keep trying the same thing and hoping it'll magically work. I'm really torn on this oil situation. I think it could go higher. I really don't know what to do, but I think we do want to get a lot of capital. I think it would help us, and interest rates could go lower, but they're probably not going to go a lot lower. So let's go ahead and check out our holdings here. And here's our government bonds that we bought. Not much, but look at that price. Remember when we bought, it was at 109. Here we're almost at 150. And we have gained almost 800 million. Yeah, 744 million on that. That was really good for a first month, and we are cashing that in. So let's go back here. We have our cash. We still have our debt. The sweep won't take effect until the next day. So I just want to go here and show you guys, if you go up to finance while you have your player selected, you can go down here to debt. You can borrow money, repay loans, trade T-bills, and I guess there we go. We are debt free. Let's go here to trade T-bills. In case you're unaware, T-bills are basically really low interest money that you can buy. It's same as cash. You can immediately convert it to cash at any time. I'm not going to do that right now. You can turn T-bills into cash. They effectively act as cash for you, but they do gain interest, whereas like money that is actual cash in your account does not earn interest in the game. Okay, so here we are. We have 1.75 billion, and I am going to buy some oil futures instead of just buying straight up oil. So I could do that if I buy here. I'm buying physical oil. I'm going to buy futures because then my contracts cost much less. And you don't want to buy a really short contract because this is the expiration date. You want to buy a further out contract because these things take some time to move around, and you want to have time to readjust yourself and just be prepared. Oh boy. Okay. Speaking of prepared, 35,000 contracts on oil is a lot. I really need to go up, or I will be bankrupt immediately. In which case, you won't even see this. So what am I saying? Okay, it did go up a little bit. I mean, look at that. We're up to 71, 72. Kind of looks like it's just sitting there. Now, granted, I could cash in right now and just be happy that I made another few $100 million. But let's go back to those banks. We're going to hit this research button, and we are going to go. I just want to show you guys this. Companies with most cash, these are all banks. They have a ton of cash right now, and let's just pick JP Morgan. This is one of the huge ones, right? And then we're going to go over here to their financials and view their financial disclosure right here. This is my favorite button in the whole game because it basically brings you to a balance sheet, which you saw on the classic Wall Street Raider. But this is a good way to kind of understand how a balance sheet looks, especially for a bank. They have cash and T-bills, the same as cash, and then down here they have assets, which are all loans that they own, bad debt reserves, and then down here you can see their demand deposits, which is what companies who bank with this bank in the game have stored at the bank. So this they sort of need to have available. And then CDs, which is more like long-term, that they still owe, but if you look at this, they have all these assets and all these liabilities. This is a huge bank. This is a $5 trillion under assets bank. The actual equity, not that large. But what this bank needs to do is to sell this $1 billion or $1 trillion of government bonds, because the way banks work, this market value of bonds does not update. Okay, so this is what cost them to buy all these bonds. They could sell them for a lot more because bond prices are crazy high right now. So that's kind of why you see that disparity in the valuation of the bank. But I digress. Let's watch my my net worth either collapse or skyrocket here. 70. Oh, there we go. Okay, I need to stop. Okay, friends. Trading commodities in this game is like an addiction, okay? It's really hard to quit, especially while you're ahead. But I need to do it because we have 4 billion. We are off to a crazy good start. Let's go ahead and sell this. We're just going to liquidate these contracts that we had. We bought them. Now we're going to turn around and sell them because we bought them at 72 a piece. Now we're selling them at 80. A nice tidy little 18 Yeah, $1,824 million made off of that in a very few days. And I'm going to do my best to stay away from the dragons over here because they can easily destroy you. So easily destroy you. But now we have 4 billion. And we should consider possibly setting up a holding company, but I don't like to do that until much later in the game. A lot of people will tell you, oh, set up a holding company, do all your trading under them, yada yada. Listen, the way I like to do it is I like to buy a company and then give them my personal cash to help improve their balance sheet. Then I IPO them again to get extra money, sell them off, and now I have more cash. Instead of all of that happening within a holding company and then I have to do an extraordinary dividend, it gets really complicated. So now we have a whole bunch of cash that I want to invest because we really, to buy a bank, we really are going to need like 40 billion probably. Let's go back to cash. I'm just going to grab this so I can click on the banking industry. And in this one, let's see. Here, you can use this as a gauge to find smaller banks. National Bank of Canada, Laurentian Bank of Canada. Okay. I'm Canadian Imperial Bank. So there's a lot of small Canadian banks apparently. And one of the things here, we can click on this and then go to financials, view disclosure. Their equity is tiny, and their stock capitalization is not terrible. It seems really overpriced to me right now. I can't afford it, but this just speaks to my point. One of the tiny banks, their market cap is 40 billion, and we need that. We need to buy the whole thing. For me, it's all or nothing. So let's go back to the research tab and let's go ahead and find a small company. You know what? Instead of doing this, that's not helping me. We can go to industry growth rates. Let's just check on projected return on capital assets. This is very important for a company. This determines how much they make based on how many assets they have in business assets, and we want to find one that's making a lot of money. Now, let's go ahead and check out building materials. This is going gangbusters. I mean, this current demand growth, especially for building materials, is wild. It seems like the economy is sort of like going crazy. Let's see. Let's take a look. Okay, GDP of 3%. Well, that doesn't seem crazy, but for the US, that is pretty good, I guess. Let's go back. Base metals. No, that's not good at all. Where is it? Building materials. Let's click on this. And let's do a deep dive on this industry and see if anything here is worth buying. It looks like if you take just a casual look at the analyst rating, we do see some strong buys here. And I sort of agree with one of them, but let me explain what I'm looking at and how I usually kind of ignore the analyst rating. Let's actually go to the projection here. And this is my favorite screen in the whole game because I love taking over industries. And here you can see the market share ranking, and you can see the price to net worth, and you can see their credit rating, their dividend yield, growth capacity, percent spent on marketing. These are all super critical that we'll talk about a little bit later. But for me, the most important thing when you're buying a company is to pay attention to this price to net worth. Because the way that the Jenkins terminal, the Jenkins engine works, which is what they call the game behind the game here, is your stock price is generally some sort of multiple of this right here, your pre-tax return on capital assets. And this is determined basically by how the industry is doing and how good your managers are. But it's always going to be some sort of multiple of your actual net worth. And so if you can buy a company that's closer to its actual net worth, they have a lot more space to go up. Like you can see, some of these are trading for 350% of their actual net worth. This one's trading at 136%. If we can get this to that, we're going to triple our money, right? So let's go ahead and take a look at this one right here. I believe this was also rated a strong buy, if I remember correctly. I'm just looking over here at the advisory summary. It doesn't say here. Oh yeah, it does right there, right in front of my face. Analyst rating, strong buy. We can take a look at the analyst summary up here. A PDE ratio of 40. Oof, that's rough. Book value, that's more than I can afford. But the cash flow is positive. Let's take a look at the research report. They earned $2.42 a share for the full year. Oh yeah, I could see why that PDE is bad. And they have a subsidiary company. Oh no. Well, let's go ahead and look at the shareholders. Real Estate Holdings, that's an ETF, owns 6%. The public owns the rest. And they have 100% of this paper company, which is worth a significant amount of money. Okay. Well, let's go back to the financials and view their disclosure. They have about $35 billion in business assets, and that is the thing that gets that return on assets. So we're earning 30% of this every year, every quarter. I'm not entirely sure. But that's why this number matters. This basically determines your market share in an industry, and this is kind of the number we want to pump up if we want to take over the industry. Let's go a little bit deep on this financial balance sheet. This is really important to understand, and if you're new to the game, you need to spend a lot of time here just to understand how it works. But you see your cash, your T-bills, cash equivalents, and then your working capital, which is money you have invested to earn money on this money. And if you're a business major, you know exactly what working capital is, but if you don't worry about it. It's just sort of imaginary money floating out there in space that you don't have to worry about. And then down here, we get our total assets. You add all this up plus that stock, you get the total assets, and then here you have your liabilities. They have about 10 billion in bonds, 10 billion in a bank loan, and so that's not a lot of debt. If we could get control of this company, sell off that Boise Cascade paper, we could pay off all this debt. We'd have a bunch of cash, and we could roll up a couple more companies. But look at that stock capitalization. That's pretty high. That's I don't know how I'm going to be able to buy a controlling stake in this company. Let's go back to the overview. In this game, to get a controlling stake of the company, you have to get 20%, I want to say. But the AI players will always buy 25%. For whatever reason, that's what they do. But we want to be able to buy this stock. And let's just hit buy, and we're just going to hit enter. And, okay, it's showing me National Bank of Canada. That's not what I want. So let's back that up, and we are looking at BCC, the Boise Cascade Corp. Let's hit submit. We don't want to buy that. This is a pop-up that tells you if you buy more than 5% of the available shares, you have to pay like a markup. And I don't know what exactly the markup is, but we won't be paying whatever their quote price is. We're going to be paying a higher price. We have the funds sufficient to buy 8%. So we don't have enough to buy a controlling stake of this stock. We could buy it and hope it goes up, which doesn't seem like a bad idea. But instead of just buying the stock outright, I think I have another idea, which is we're going to go up here. We're going to click on the player, and then we're going to go to our trade button, and we're going to go over to options, and we're going to buy call options on Boise Cascade Group. Now the way an option works is you're buying a contract where someone is agreeing to sell you a stock at that price. That's the way a call works. So we're going to have a call at 75.22, meaning that at a future date here in October of 27, if we pay $10.77 a share, we can buy the stock for $75.22 in October. So when we're doing this, we're essentially betting that the stock will be 75 plus this premium when we get to that date. For a total, so to buy 1% of the stock, it would cost us $129 million. Now, you'll see, this is a pretty good deal because we can afford way more than 8% at this price, right? And in fact, I might go with a shorter contract here so we can save some money. But instead of just 8%, we can buy 10%. We can actually buy more because you're limited to 10% per transaction when you buy options. But that only costs us $900 million. And look, whoa, the stock price just shot up. We just made $2 billion. Do I just turn around and sell it? I think we could wait. Let's go back to BCC and see. It's still a strong buy. Let's check out the research report because sometimes, they have a target price. And it's pretty close. Honestly, my experience with this game is when you're getting anywhere close to a target price, you might as well liquidate your position. So I'm just going to go back to my holdings. That's not me. I'm going to go back to my holdings here, and we're going to sell those right away. I just made 887. Oh, even more than that. $1.5 billion on the sale. That was fantastic. We could now buy more, but actually the price has gone up. So I think we might have to trash our dreams of buying into Boise Cascade. But we're going to go back here. And we'll go back to the building materials industry and see if there's anything that we want to buy. Let's see. We have some smaller companies down here. I mean, this one's tiny, very tiny, and it's probably not in a terrible position, but I kind of want to check out this company here. It had a price to net worth of no meaningful figure, which means this company is going belly up. The credit rating of D, if you look at this, the total assets here, this is immediately where my eye goes when I look at this page. This total assets here is 2.3, total liabilities 2.5. So there's a negative equity, and the stock is selling for, a market cap of $4 billion. Now, if I try to go, I'm going to actually add this. If I try to go to player and trade and buy puts, so on this company, I'm surprised it's going to let me do that, because I think I'm almost guaranteed to make money on this because the company's going bankrupt. There we go. Okay. I'm very curious to see where this goes. But usually you can't buy puts, but you might be able to sell short on one of these stocks. So let's try that. Let's go with a short sale on NX here. And here we go. It won't let me. The stock exchange is currently prohibiting sales of the stock of Quantex Building Products, which is under the protection of bankruptcy court. Okay, so why is the stock trading for anything above zero? That's the real question. It shouldn't. So let's go ahead and take a look at it. Yeah. Well, I guess they are still earning money, right? Okay, estimated cash in 3 months. So it is burning cash. I believe. Let's go ahead and take a look at our breakdown here. Oh, lifts earnings targets. Well, that's the opposite of what I wanted here. Projected 3 months cash flow. They are burning cash, but they actually have a little bit of a cushion. So just a warning here, if you're counting on a company going bankrupt as soon as you want it to, it will not. And in fact, it might recover, but luckily, if we go back to our holdings, because we bought put options instead of actually short or bought the stock, our total exposure here is only 55 million. And if this company, if we don't make any money on this, this is totally fine because we only lost 55 million. In the grand scheme of things, it's nothing, right? What's 55 million between friends anyways? Okay. I'm not super happy with what we're finding in the building products industry. So maybe we need to reset and try something new. Let's go back to research, and we could find possibly a slow growing industry like retail apparel here that they're having a hard time. Let's go ahead and check them out. We'll go to the heat map, and we can use this up corner thing for details here, and we can just see what the market caps are right off the bat. Okay, a lot of these are way closer to our range. Abercrombie and Fitch for 719 million. That's not too bad. Let's take a look. And I actually kind of want to go back to the retail and apparel. Let's go look at the projections here. Who has a big market share that's trading at a good price? I'm going to pause this so the numbers aren't bouncing around quite so much. And it looks like maybe Limited Brands. Let's take a look at them. Okay, so here we are at the LTD stock, and we can just look at the advisory summary for some nice information right up front that will help us. The managers are mediocre, which is fine. But I'm looking down here. The analyst rating is hold, which that, like I said, I kind of disregard what they say because they're smart, but they're not super smart. What's interesting to me is this right here, the finances. It has negative cash flow, but it has ample liquidity and bank line of credit. Cash flow before debt repayments is actually positive. And the industry outlook is for high levels of profitability, but with overexpansion likely to cut into the current rich profit margins soon. So it's probably a little bit overpriced right now. Like the profits are high right now, they'll probably go down in the future. But I think this one might have some potential here. Okay, so they have some stock, which I don't love. You're always overpaying for that. We got to make sure we take a look at their holdings. But they have a ton of debt here. So we could sell off some of this stock and pay off debt. That would not necessarily improve our equity, but it would make us much more attractive to potential shareholders. Because companies loaded with debt are not, their stocks tend to underperform in this game. Now let's scroll down. The public owns 100% of it. We could elect ourselves CEO. They have bonds trading at, let's see, I can't tell, but I can call them at 100%, at 101%. That's not bad, so we won't necessarily overpay for paying our bonds off. They're due in 2 years. We could pay them off a little bit early, and again, that would make us a little bit more attractive. Let's go back to their overview, and I want to take a look at the industry again. We're going to look at this projection, and so this is Limited Brands. That's this one right here. They have 8.7% of the market share. And their return on assets is not great, but I believe this is Intimate Brands. This is the other company they own, and they look to be doing about the same. So like kind of meh, not great, but if we can turn this 159% price to net worth up to 400, we're going to be feeling pretty good about ourselves, and we're going to try and do this very quickly. But let's just take a look at everyone's return. That's pretty good. The dividends are 0. Perfect. That's what I like to see. And let's go back to our summary then. And let's see. Okay. Is there more information here that's useful? Well, this table organizes them based on the return on equity, which to me is like a completely worthless number because that's not really how the stocks get priced in this game. Now let's go back to here. Can we go back to here? We're going to click on limited down here. I kind of like it. Let's go back to their financials. We'll view this and we can buy the whole stock outright. We can buy 100% of it. I think we can do it. I think let's do it. Let's go ahead and hit that Control S, save the game. Okay, so we got it saved. While we have $5.5 billion here, I'm feeling pretty good because we're only 3 months into the game. But now here's where we try to maybe get a little bit into the corporate raider aspect of this. So let's go ahead. We are going to buy LTD. Oh, that is not what I want. I don't know why it says that. ANF. No, we're going to back this up. We're going to go LTD and we're going to do a tender offer. We're going to buy 100%. It's going to cost us $4.8 billion. That's fine. And we have successfully bought it. We don't have any debt. We still have some cash. What I want to do is improve our market cap by paying off debt and basically making our cash flow positive, and then turn around and doing an IPO with this company that I just made private, and hopefully see some return. I'm gonna try and redeem bonds right now while they're cheaper. Okay, no if I want to buy them back, or yes if I wish to redeem. I'm gonna redeem them 100%. Let's do it. We're gonna borrow on our bank line. That's fine. And now we are going to go to our holdings. Look at that awful P&L on this. We could, let's go ahead and take a look at Intimate Brands. We could try to do a, what's it called? A liquidation. We could try to liquidate, a tax-free liquidation. And what that would do was, if we go to our financials here, we're going to go to here. That would move these business assets and equipment and this cash over to LTD, but it would also move our debt and our bonds over to LTD. And right now the equity is only $1 billion and the total capitalization is $2 billion. So if we sell it, we're getting double what the equity is. If we merge this into our parent company here, we're going to lose some of this multiple here. So I think I'd rather do a IPO with this and just sell it off if we can. Let's go to shareholders. Yes, limited owns 100% of it. We're going to go to corporate and we will do, or is it finance? And where is it? A public stock offering. We're going to just go ahead and do that. Okay, so they raised some money. And now we can go to our financials. We have extra cash now. We're going to use it to, not borrow. We're going to use it to repay some debt that will hopefully increase. There we go. This will hopefully increase our market cap here. And let's see, where is it? Financials. No, here, actually, I'm just going to add this. Okay, so it's at 24. Hopefully that creeps up a little bit, and us as the parent company can just sell off this stock. But I think I should have just sold it at 24 because now it's bouncing around at 21. That it would have been a lot nicer if it was higher. Although it does seem like it will probably do well. I could just sit on it for a little bit. Let's actually go to here. And we're going to go to overview. We're going to add this. We're going to go back to our holdings. And now we can just sell this off. There we go. 80%. We lost a ton of money, but that's fine. That happened before me. It was not my fault. And we are going to go here and we're going to repay some of this bank loan. And there, okay. That's going to make our books look a little bit better. And if you saw that, our cash flow updated. And now, my friends, we have positive cash flow. We can go in here and take a look. We don't need to worry about the extraordinary, but so we're earning 156 million. We're paying 29 million in interest. And now we can deal with some of this other stuff, but we have positive cash flow, which is going to make our stock go up. We're at 42 now. Hopefully it will shoot a little bit higher, although the stock price tends to be determined by what your future earnings are supposed to be, what people expect your earnings for the next quarter are going to be. So right now they are projected to be 50 cents a share. If we go to, let's see, our research report, we can see, yeah, when is the next earnings? I don't think it's on this one. Okay, we're going to go back. We're going to go financials, disclosure, and let's see, where is the calendar? It should say what day here it is. Next earning report is June 5th. So we're a few months away, so we're just going to have to kind of deal with that. But that's okay. That gives us some time to adjust some things. What we need to do is go down here, and we're going to adjust our growth rate actually down. This is going to do a couple things. One, it's going to make us burn cash a little bit slower. It's going to make our business assets grow slower, which is not great. We're going to kind of slip in our market share. But the thing is it also reduces pressure on the total supply-demand situation for this industry. So overall, it's going to make us and all our competitors more profitable because less capacity growth is happening in the industry. And if there's less capacity growth and demand is increasing, prices go up. Now, the next really important thing you need to do as the controller of a company, and this is probably the most important thing you do, is go down here to R&D ad spend and adjust it. Because the computer, the AI, is always going to set this to what it thinks is reasonable. Now, I know what's reasonable. If you have mediocre managers, you're never going to earn a ton of money on your business assets because your managers suck. You need to improve the quality of your managers. And the best way to do that is to jack up your productivity spending. I am actually going to go crazy and go all the way up to 14. Now, this is going to make our cash flow get worse because we're spending a lot more money on productivity. If you saw that, we just lost 20 in the estimated cash year. But this is going to improve how good our managers are, and that will directly affect how much we get in a return on our assets. And long term, spending money here pays massive dividends if you have a lot of capital. You will earn way more money. Now, we are sitting pretty. We are down to 2.2 billion in debt. And I guess my question is, does it make sense for me as the player to take debt to give to the company to pay off their debt, see how much the stock price goes up, maybe our holding, our net, if we go here to the player and we go to our holdings, we can see our P&L on this. Right now, we're down 500 million. Our cost basis is high. If we bump up this cost basis, can we maybe make that chart shoot up? Let's hope so. I think we do it. I think this is usually how I would bankroll improving a company. And if you can do it really fast, you can turn around and IPO them very quickly. So we are acting as our player. We're going to go over here to finance. We're going to do a capital contribution. Since we only have one company, it's going to contribute capital to Limited to Inc. And you can do contribute cash, assets, stock, bonds. I always do cash. And here I'm going to give them enough that they can completely pay everything off. So we're just going to go like this. All right. Yes, I will have to borrow money. That's fine. Interest is imaginary. Okay. And you can see our net worth went down because temporarily this was a bad financial move. But if we go over here to Limited Inc. and we go ahead and we repay all of our debts, this is going to improve our credit rating. This is going to improve our estimated cash flow. Our operating profits looking really good. I think right now we can just let time click along, and we can see how our stock price is going to bounce around. I don't think we see major returns until probably after our next earnings report, which was in June, which is quite a ways away. And if you take a look, our net worth here took a massive hit, right? Because the people trading in Limited Brands, which it is a private company, so nobody, but the outside experts seem to think they know better than me, but they don't. They do not. And I don't know here. Let's go. Oh, I forgot. I need to elect myself as the CEO. I will now collect personal pay and get some annual bonuses if the company does well. And once it goes public, I could get stock options, which can be great for really large companies. But for companies where I'm in and out and I don't care, yeah, none of this matters really. But maybe I'll cash one tiny check from them. Thanks, guys. This market cap is looking pretty good now. If you take a look here, that's not too bad, but the problem is we spent that much and then we gave them $2 billion, so it needs to go up quite a bit. But that's okay. While we're just kind of waiting for time to click by, and hopefully we can make a lot, let's go ahead and take a look. Where did interest rates end up? Okay, short bond fell to 1%. So if we had held on to those gov bonds from the very start of the game, we would be up a little bit more, but not nearly as much as, betting on oil or, trying shenanigans with stocks. Now, we'll see. Profit taking sends stock market into a tailspin. Okay, let's look at the stock index here. It's at 6,500. Let's see where it lands up. Okay, I wouldn't really call that a tailspin. LTD clobbered by currency swap losses of 364 million. Well, that is a really bad beat for me. That's a major bummer. It's okay. We'll be fine. What's nice is they're no longer in a bunch of debt. Now they have free cash. If we go over to their financials and take a look, their free cash is 0 right now, but the very small bank loan. This is way better than what their situation was before. And I know it's going to go up because if we can hit 50 cents for the first quarter, 50 cents in the second quarter, maybe $1 in the third quarter, all of a sudden our earnings looks double what it was the year before, and you will get a huge return as far as if I can afford to wait that long. Because the problem is here, my total debt is 2.35, and my net worth was slipping below that. Pretty soon you get a margin call from your bank. They don't like to see your net worth lower than your debt. So I really just need the game to help me out here while we wait for June 1st. But that's okay. I should probably resign, right? This whole getting free money thing has been a huge debacle for our brand. And it's not getting us much closer to our dream of a giant financial empire. But I guess while we wait, we got a few more days. Maybe now's a good time. No, I don't want to do the database search right now. That's a great place to spend time, but that's not what I wanted to do. I want to go to the heat map. Let's take a look at insurance. Insurance is having a hard time, these poor guys. Their price to net worth is never going to be great. In fact, let's pause it. If you take a look here, insurance is sort of like the ugly step cousin of banking, and I apologize if you work in the insurance industry, but it's true. The way insurance companies work is similar to the way banks work in that they take money from you and then they invest it, and then they earn money basically on the money you gave them, and then they give the money back to you in the form of claims. Banks, same thing. They take your deposits, they lend it out, they collect the interest, and then they lend, you get your money back if they want to give it to you. Now, if you look at this, ING Group, their price to net worth is terrible. But if we go in here and take a look, we look at their holdings. Yeah, they got some gov bonds that they really should sell. I mean, look at that. Look at the P&L on that. That's insane. All of these have done pretty well. If we go to their financials, they have a ton of cash. Oh, they have the Capital One financial stock. Okay. And here's their insurance policy reserves. This company is in a really good shape. I should buy it. I would buy it if I had more. But if you take a look, the analysts agree it's a buy. But if you go to, where is it, the financials, let's take a look at their cash flow. Their underwriting profit is massive negative. And then they get some income from their subsidiary and interest on the bonds that they have. So like, they're not doing terrible, but they are losing that much cash every month. Man, that's rough. That will definitely send your stock price into a tailspin, even if you have a ton of equity. Now let's get rid of this old Quanex. Let's get rid of Intimate Brands. They've sort of collapsed. Let's see, get rid of that. Take back a look at our limited. I'm gonna go over to the player. Take a look at my holdings. I still have the, ooh, hey, look at this. Would you look at that? My long options on this. Okay, I can't remember if they're long or short, but I made some money on this. My P&L is 24%. I need to sell that. I need to sell it now. Okay, I can't believe we came out ahead on that. I'm feeling pretty good. Okay, our limited brands, we are deep in the hole. Look at that cost basis versus the market value. But I am confident actually it will turn around. I just I need more time, and hopefully I will be given that time. Let's go to our holdings, and I'm just going to click over to them. Here we go. We hit the earnings report. So let's take a look at our very first earnings report. If you've never seen one, I'll walk you through the important things you need to see. So we had a decrease in net income. That's fine. I don't care. Earnings per share was 18 cents, which was not great. The operating profit was 17 million, also terrible. We added to our contingency reserves. Okay, so really it wasn't that bad. And our year-to-date earnings is doing pretty poor compared to last year. But earnings were off, but beat the consensus estimate. Oh, that's right, because I had all these massive after-tax loss items and all this stuff. Overall, I kind of expected that. Now the real question is, what is our projected for next quarter going to be? Ooh, a projected loss. Oh, that's even worse. That is not good. And so I'm kind of wondering, why is it so bad, and why is my cash flow so negative? I think the problem might be that the whole industry is seeing a pullback. Let's go to projection here. Okay, we have some over expansion here from TJ Maxx. Of course, the Maxinistas. Ugh. And here I'm getting some margin calls. Okay. Well, yep. Pending important news. Oh, this could be good or bad. Let's see. Oh, okay. I am fascinated. Inditex is offering to acquire all of the stock at 53 a share, 41% premium. Now, let's see what happens. I could vote to do this, and basically what this would be is cutting my losses. And it might not be a bad idea to cut my losses. Sometimes you have good ones, sometimes you don't. But let's see if maybe the stock price hits that 53 or maybe rockets past it. It'd be really nice. It'd be really helpful. I'm glad I sold out of that Boise stock because it did not go up that much more. Oh wow, yeah, it's fallen apart here, but that's okay. I just need to make it till whatever date that that buyout's gonna happen, because right now I am deep in the hole on this stuff. Let's go back to the player, take a look at our holdings. Look at that. Oof. That's really rough. And I'm probably gonna walk away from this a very bruised and battered billionaire. But I think I'm gonna be okay. We just have to wait until we can agree to that buyout. And you know what, friends? Right now is maybe a good time to get philosophical. Oh boy, yeah, the margin calls just keep coming. You can, it's gonna happen. In this game, you will go bankrupt, bad things will happen, and that's how you learn. Now, I know that that's how it works in life, and that's how it happens in other games, but a lot of other games, man, they'll kind of coddle you. They won't let you fail immediately. This game will let you fail because it is, like I said, the greatest financial simulator ever made. And by that I mean it's so incredibly deep, and I won't say it's like a perfect simulation of the real world, but I've never played any other stock market or anything simulator anywhere close to how in depth this is. And so that means you can easily get over your head, like I have on my. I should have known. I should have. I should have never gotten into the apparel business. It's a terrible business to get into, my friends. Truly terrible. We're just creeping along. I think it was July 15th when we can sell out, and we are absolutely going to take that as long as they're still offering it to us. We're 1 day, 2 days away from salvation. I'm really curious, okay, how much we're going to walk away with this. Their trade, okay, so I'm going to end up with stock here, it seems like. Yes, let's just do it. We're doing it. Okay. You have lost voting control, which is now controlled by them. And now I have voting control of ITX. Okay, now let's pause real quick. Our net worth is back up to $3 billion. Let's take a look at the company that we just walked ourselves into. Inditex, what's your deal? You have positive cash, really good operating profit. Let's go to your financial disclosure. You have a lot more business assets. That's a pretty sweet deal. Bank loan, not too bad, and that's pretty good. I'm actually a little bit happier with this. This is a Spanish retailer. Okay, cool. Let's go to shareholders. I have 34% of this new company. I do have a controlling stake. That's not what I wanted. We'll hit the back button. We'll go to financials here. Let's just take a look. Do we have a lot of cash to pay off debt? No, we don't. Let's see. Do we want to do a liquidation? Oh, Inditex is not owned. No, I don't want to do a taxable liquidation. Do they have any holdings? Let's see if we go here. No, they don't. Okay, so I don't think they're in a terrible spot, but I do think that the price is probably going to fall because they just inherited a bunch of unprofitable stuff. Yeah, the analyst rating fell to sell. I think me as the player, we're going to go ahead. We're going to just sell off these new stocks that we got and just count it as this could be worse. We lost 2.2 billion. That's a rough beat, but you know what? It takes you got to take your losses to take your winnings. We're already up. We're up overall. That's better than being negative. And now we just need to hunt for our next earning opportunity. I'm seeing some. Look at the jeez. Look at this. Crypto is like at a crazy price here. We can take a look at our candles. It's currently in a bounce up. I think it probably peaks a little bit higher, but then falls down. We could consider shorting some futures of crypto. Let's take a look at oil. Oil is way up. The way it tends to work is it then falls, and I am sort of curious. 6-month moving average. Is that what that is? I don't know. I should know, but I don't. I'm curious if I should short oil, if there's anything over here that's, I mean, crypto is crazy high. It looks like the economy is going gangbusters, so maybe shorting oil is probably a bad idea. I'm sort of curious. I don't know. I don't see any particularly good commodity trades I can do. Corn, no, these are too small. Well, here. I think maybe we can short some silver because it is way overpriced. Let's just buy one and hopefully this will pay out. We're only going to do one contract or 20,000 contracts. We can earn some good money on this, but this hopefully won't bankrupt us. I guess we'll have to see. Now, while we just kind of wait for that to magically fix itself, let's take a look. Here we can see the news scroll going by. World Energy Fund here. Precious metals projected upward. That's probably not good for my silver short, huh? Oh, jeez, Trim. It's fine. Let's go over to search and let's do a database search. We're going to look for something that we can buy that's under $1 billion, okay, here, and has a bad credit rating, like a C. Okay, management here. Let's look at this one. Tatung Computer Peripherals. Super small cap, has a pretty good book value. The P/B is not bad, but the management is excellent. They just have a bunch of debt. So let's go ahead and take a look at them. I kind of like this because it means that maybe we could pay off some debt. Yeah, some negative cash flow. May have to soon begin liquidating assets. Hefty profits for the industry. Toshiba shrinking. And so that looks pretty good. 52-week low. Are we at the low right now? We are. Oh, okay. So now let's go ahead and take a look at their financials. Look at that. Look at the debt on her. That's some terrible earnings. That debt to equity ratio is crazy. Yeah, wow. Let's go ahead and take a look here. So this we could maybe save this, but the thing is we need a lot more cash to bail them out of this situation. And I don't have a lot more cash because I just lost it on my other plan. Okay. Ah, man. Okay, well, that one's not so great. So let's go back to our database search here. Here's a really small one. It's in the specialty chemicals. We have some competent management. I like to see that. And let's see. Price to book is kind of high, but not terrible. Let's click on them. Morton. I assume they're the salt people. Let's see. Cash flow before debt repayments is positive. Book value. We're going here. Financial disclosures. Okay. Equity 60. Man, this is a tiny company. Okay. Let's do this one. I feel confident I can lose less money on this one. We're going to add that. We're going to get rid of Tatung. I'm going to just buy Mort. Let's do that. Okay. Falling like a rock. Yes, I'm fine. I'm going to buy it all. It won't cost me hardly anything. 117 million. That's totally fine. Let's go back to their financials. They owe about 500. I think I can just float them 500. Let's go ahead and do it. We're going to go to the player, finance, capital contribution, cash. We're going to go let's do 939. So we're gonna pay off all our debt. We're gonna go back to Morton. We're gonna go here. Elect me as CEO here, please. And now we can go to our financials. We will redeem our bonds. Let's see. They're trading at 106. I can call them at 101. So yes, I want to call them. We're going to call it all. Pay that off. We're going to repay all of our debt. Okay. Fantastic. And that leaves us with 488 million in T-bills. And I want to increase our business assets so that we can actually earn some more money. We need to go ahead and adjust our R&D spend. And on this, in a mature industry such as specialty chemicals, you never really want to set your R&D super high. It's just you're overspending, and you're not going to get quite as much out of it. So I'm going to set it at 9%, and I'm just going to forget this. We might be able to hold on to this company because we're hardly into them. If we want to turn around and sell them, we probably can, but we maybe don't need to. And I'm actually going to bump this down to 9% as well, because we are tiny in this industry, but I don't want to overexpand and just burn up all the cash I have. And while we're talking about the industry, let's take a look at it. I bought in without having any clear plan. Here we are near the bottom. It looks like there's maybe some good takeover targets right above us that are not earning a lot, so their price to net worth is pretty low. This one's AA, so they might have some cash. This might be a really good one to look into. Let's take a look at it. Their financial situation, yeah, also pretty tiny. They have no cash, but very small bank loan. This would be a really good acquisition for me to increase the size of our company without overpaying for assets. And we have a couple options when trying to buy new assets. If we actually go back to our Morton stock here, if we go to corporate, we can buy corporate assets. So we can either buy new, which would negatively affect the industry supply demand situation, but we would get new assets. We can say no to buy them from another company, and we would probably have to overpay, like we could here if we just pick this random one. Sure, 878. Yeah, so we would pay a premium over book value, which is not necessarily great, but this would not negatively affect the supply and demand because we would not be adding actual industry capacity. Or you can go to corporate and browse the for sale items and hope that the industry you're looking for is in here. And sometimes if you're looking to get into a new industry, maybe you'll say, oh, I want to buy into the building materials or oil companies because then I can turn around and buy these assets. And these assets are for sale at 95% of book cost. So you can get a good deal on them. But granted, they're from non-profitable industries, usually. I'm not going to do any of that because we don't have any there. But let's take a look again at our Mort stock financial disclosure. We have about half of what we need to buy out that other company. I kind of think that as the player, it might be worthwhile giving them the cash to buy that. So let's go ahead. We're going to go back to finance, capital contribution. We're going to go, yeah, just 1,000 here. We'll get rid of that. We'll do 1,000. Oh, did I not have numlock on? Let's try it. We'll do 1,000. Hit enter. We're going to go back to Morton, and we are going to go to trade, buy stock, and it will be LYB. Okay. Hit submit, and we want to buy 100% of it. Yes. That's not a bad deal. We did have to pay a little bit extra over book, but we have the option now of doing a tax-free liquidation of this company we just bought, which will just basically make it disappear. Here, if you hit this little light bulb, it gives you some help, and I strongly suggest if you're a new player, you go ahead and read all this. But you can go ahead and liquidate them into us. It's like they won't exist, and now all those assets and liabilities are now on the books of Mort. As you can see now that there's that negative cash here, you can go ahead and pay off this bank loan. Yes. Okay, so now we are looking much better. We have a lot more assets now, right? We went from 400 to 1300 here, and so that means we will be making more money. Let's go ahead and take a look. Now our net profit from operations is going to be 77 million, and we can hope that our earnings per share is going to go up. Yeah, now it says our projected earnings are expected to be 140, and if we look here, our earnings in the past have been pretty terrible. So I'm hoping that that was a good thing. Now let's take a look at the industry again, because there were some other ones that we could possibly gobble up. Let's see, where are we on the projection here? We are now up at 3.6, so we're rocketing up the chart here. We're rolling up the industry right now, friends. Let's take a look. There's a small one down here. Is there any other? This one has a pretty good rating. Let's take a look at it. It's probably as big as us, and so the problem is going to be that. But that's not terrible. We would be doubling in size again. If we can swing it with our current balance sheet, it might be a good idea to just roll these up. In fact, I think I want to do it. Let's go Engelhard. Let's see. Let's go back to Morton. We're going to buy EC. Okay, I'm just going to do it right here. Let's take a look. 110. Okay, we need to borrow $1 billion, but I think this is going to be fine. Proceed, yes. And liquidate them in. Okay, let's take a look at our new financial disclosure. We have basically no cash. We have debt. We're now more like a regular company. Our equity is sitting at 1.6. Our total cap is at 2.4. And if we go back to our player and look at our holdings, here, Morton, we are actually up. We are up a little bit. Overall, we've sunk 2 billion. The market value is 2.4. If we go back to Morton, right now might be a good time to go ahead and do a IPO. So let's go ahead and do it. We're going to do a public stock offering. We're going to keep the new float very small. We'll just do the smallest one possible. Well, maybe not. Let's do 5 million shares. Okay, we raised 500 million. We can use that to pay off some debt. That makes the company a little bit more attractive. Okay, it's at 104. I think right now is probably a good time for the player to sell it. Oh no. Okay, yes. We're up 500. Let's sell it out. Yes. And our final gain after paying all the fees and losing is only 200 million. But there you saw, you can use some of your cash to buy a struggling company, roll up a struggling industry a little bit. If we go back to Morton and just look at the industry now, let's see. They are, where are they? Why can I not see it? Here they are. They're way up here. They're at 7.4% now. They're probably still a good company to buy. Like, I could buy that and be happy with it long term, but I don't feel like waiting out whatever this this is. So I'm just happy to have made our money, but you can do that over and over in all sorts of random industries. I mean, overall, I feel happy that we came out okay. Let's go back to our player and check out our holdings. Our P&L on these silver futures not doing super great. If we go back to the overview here, let's take a look at this chart. Looks like it should be, I mean, in my imagination, it's falling off this direction, right? So I'm going to just buy some new short futures. And here, we can take a look at this book. Do you see something? Okay, just look at these. All of these prices are about the same, right? Okay, so yep, transaction canceled. That tells you that the traders in this commodity market have no idea where those prices are going to go. If we go to oil and then we go to short futures or buy futures, it's the same. This is also fairly flat. Again, telling you that the traders don't really know which direction things are going to go. If we find one that's on an upswing, here we can buy futures. You can see that the price is climbing as you move down the book. So that's telling you that the momentum currently, the game thinks the momentum of this commodity is pushing higher. And if you take a look at this chart over here, you can see that it is. But I don't want to trade corn because it's just not worth it right now. But I do think I'll just short some more silver so far out. I think we can just go out there. I don't think we're going to lose a ton on this. So I'm feeling confident that I can do this and not be in a horrible place. Although if it does skyrocket or something. Whoa! Whoa! I don't know what I did, but I just manifested cheaper silver. I have no idea how that happened. Woo! Okay, and there you go, friends. That's the little dopamine hit that you get from this game. It's just sometimes magic happens. I'm gonna cover these. Cover quick. Because see, it's a drug. You have to cut yourself off. Okay. Okay. Let's go back. Where are we at? We're back up to 3.3 billion. I'm feeling good. I'm gonna just stay away. Look, it's already bounced back a little bit. Bitcoin, how are you doing? This is falling. What if we shorted some Bitcoin? I mean, these are big contracts here. The game seems to think it's gonna go up, so maybe I can get lucky and it'll fall apart. Do I want to do this? Wait, I'm gonna cancel. You know what I'm gonna do first, friends? We're going to hit that Control S. Okay, now that we saved it, let's do a little bit of short on some Bitcoin. It is at like an insanely unrealistic price. We are leveraged max to the hilt, and so maybe you won't see this in the future. Now let's go ahead and let's kind of, it looks like that was a good call. Yeah, Bitcoin fell a little bit, and just like that, presto, we're back to our starter weight here. Hit that save. As you can see, this is a good way to sort of bird your way to a higher net worth. Do we think it's gonna fall further? I'm not sure. It's probably going to bounce around. It did fall a little bit further. Our net worth is going a little bit higher. I mean, if you're asking me, this is like a completely worthless asset, so I feel good about shorting it, at least philosophically. Oh yeah, okay. Now we're hitting that higher net worth numbers. I'm really wondering, what do I do? Do we cash out? Do we quit while we're ahead right now? Do I spy any other opportunities that might be good to get in on? I mean, gold at 56 an ounce. I mean, yeah, it should be more like 2,500, at least in my experience with my 20 years of playing this game. Gold typically settles around 2,000, 2,500. So seeing it at 5 just seems unrealistic. But I don't know if maybe some changes were made to those underlying base rates. I have a hard time making that judgment call nowadays. But I mean, it sure is tempting. Oh boy. Well, do we do it? Let's go and take a look. We're up 5 billion currently. We could let it ride a little bit longer. We could just cover it. I think we cover it. I'm getting scared. I got wet feet. Overall, we came out pretty good. Okay, a divestiture announcement. This is not companies that we own, so that's fine. But as you can see, the government, if you get some weird circular ownership, which the AI players like to do, sometimes they'll force you to sell because you can't own giant circles of stock to boost your own values. So, speaking of the AI players, let's go ahead. We'll go to research and we'll see who's ahead, and we can take a look at our competition here. I currently have the highest net worth. Gordon Gekko, he's doing pretty well. Here you can see key information about the other players. They own, let's see, Bangkok Life. So yeah, that's like a holding company. These own Gordon Gekko. He owns a life or an insurance company. He's living my dream right now. But here, let's go ahead and click on, let's see, Bangkok Life. Now you can go to their holdings, and they own 27% of this company, and then this company owns 25% of this company, and this company owns. And you can see how they start to build these weird webs of owning 25% of every company in industries. It's a little bit annoying. It's frustrating for the player, but it is fun because they do have a valid. You can see their strategy. Their strategy is to buy a controlling share of a company and then using that one to buy a controlling share of a bigger company. And so eventually, just through a web of owning 25% of a bunch of small companies, eventually they can control huge companies, like, for example, like the Coca-Colas and the Googles of the world. So let's hear companies with the most market share. Apple Computer. Wow. Okay, so these companies they're just going to get sued out of existence. I don't know what they're doing. If you accrue more than 50% market share, every other company in that industry can sue you. And in fact, let's see. Aggressively raising prices. Yeah, Dell is preparing a lawsuit against Apple. Of course they are. If we go to their research report, that might show. They're starting to spend money on litigation. Oh, Compaq is suing them for $250 billion. Yes, good for you, Compaq. Let's take a look at them. I'm actually really interested. Now, when I first started playing this game, I would often buy companies that were suing, big monopolies in the hopes that I would cash in when they won their lawsuit. But it always takes a really long time. So only do that if they're also a good company to buy into. This assets, liabilities, their equity is lower than their liabilities. Man, that's usually not a good position to be buying into. They're 100% owned by Hewlett Packard. Okay. And so you wouldn't even be able to buy into their potential winnings. You'd have to buy into their owners' potential winnings on your non-tradable stock. That's just not a great situation. Let's see. If we go back to market share here. Whoa, wait. Actually, I want to go back to the computer industry. Let's take a look. Are there any small ones that we could turn around and sue Apple with? Maybe just for fun. These are crazy overpriced. This one's owned. This one is super tiny. This one is bankrupt. Let's see what's going on with this one. Fujitsu, they have no shareholders. They have no stock, it looks like. Their equity is negative, and yet their stock cap is positive. I mean, it wouldn't hurt for us to buy some puts because, I mean, worst case scenario, they go down, right? Yeah, Fujitsu, let's just buy some puts at that price. It won't cost us much, and maybe we'll make a little bit of money. It's probably going to take them a year to go bankrupt if they do. $170 million, we might pocket $50 million in cash by the end of that. We'll see. But I think it's fair to just, like, if you want to go into the search bar and you just, let's see, get rid of this. We'll just get rid of that, and analyst rating, no, credit rating, a D. If you want to just go through here and like short sell and buy puts on all of these, I think that's totally fair. Let's see, negative book value, Alcatel-Lucent. Okay. The market cap. Ooh, here's a good one. This is Baxter. Their price is crazy high. They have a crazy high market cap, and their book value is negative. Let's take a look at them. We might actually be able to short sell them, but first we need to figure out why they're not completely negative. They're the second largest company in their industry. Their cash flow is positive. Let's see. They have no shareholders. They have crazy debt. Crazy debt. How are they earning money? Let's go ahead and take a look. They have a net profit of wow, that's a lot of money. And then they have the interest expense on that. Okay, that makes sense. And they are disinvesting, so they're shrinking. Okay, so that's how they're doing it. They're shrinking to keep positive cash flow. Current, yeah. Look, if you look at this, they're shrinking to basically make all of their positive cash flow. So they're not in a horrible spot, but still, I mean, there's no way they're worth this much. Their equity is negative. I think so. For me, I'd be negligent if I didn't buy some puts on this company, Baxter, at 180. Man, yeah. And if you see, these puts are really high because everyone knows that they're a terrible company to buy into. Let's just go further out. I think it's probably worth going way far out. Yes, we will buy that. Okay, and let's go ahead and add them to the chart. And hopefully we see this fall to 110. Let's go back to the player, back to our holdings. What is it? Fujitsu. Ooh, we're already negative. We're only negative 5 million. I wanted to go ahead and add them to our streaming chart, streaming quotes here. Let's go back to our financials. That's not me. Back to the player. We are okay. Mark cost basis. We've only shelled out. Let's see, 1.5 billion for all of our shorts here. So we have a ton of cash. Our cash and T-bills is at 5.5. We can start hunting for a new target to take over. And so maybe we want to roll up another industry. Maybe we want to try buying an insurance company. Maybe we want to go ahead and look at banks again. Why don't we go do that? We'll go back to the heat map, hit up banking. Insurance is tiny over there. None of them are doing great. Let's see. This one, market cap 32, 33, 26, 61. Okay, so the smallest is the National Bank of Canada, as far as I can tell. If we go to Yeah, they're not doing great. Let's take a look at their balance sheet. Their equity stock, their total cap isn't bad. Let's see, their P to E is 3.3. That's pretty good. The debt to equity is not great. Our bad debt reserves is kind of high in my experience. Our loan to deposit's pretty good. I mean, 92, that's great. Our credit rating could be better. I would probably cut the dividends to 0. I'm actually pretty happy with how they're doing their business so far. Let's go to our loans. Let's see what kind of loans they have. They have some business customers who are, oh man, they have a huge loan to Firestone, and that is not a good one to hold on to. That is a massive amount. If Firestone went under, or if Pepsi, well, PepsiCo's not going to, probably, but Firestone's at CCC now. Yeah, this bank would be in major trouble if Firestone went bad. So we might, I think if you were going to buy this bank, you might want to sell off that Firestone loan. Because if you look, a lot of their portfolio is stuck into business loans. Not enough into consumer loans, prime mortgages, or subprimes. These tend to pay pretty good rates. Like if you, consumer loans is, think of this as credit card debt. The prime loans, this is paying 3.86, and the long bond is paying 2.78. Now, granted, you don't have to worry about. Oh, here we go. We can take a look. They earned 1.5 billion. Not bad for such a small company. Let's go back. Yeah, this is a. Ooh, I'm tempted to just pause this. Let's buy call options on this bank. I think they're a pretty good deal. At 44, yeah, let's go ahead. We'll do some call options at 44, and we're gonna buy a little ways out, a couple more. Yeah, so like a year from now, essentially. I feel like that's a pretty good deal. We're only spending 500 million. I feel like that's a pretty good premium to pay, because this bank could turn out way better. A P to E of 4 is just ridiculously low. You'd expect something like 10. Okay. How is our Baxter? Oh yeah, look at that. It was at, we pretty much hit the peak. Okay, I'm willing to cash out of that position. Let's go back to the player. Take a look at our holdings. Yeah, the Baxter one really turned out. Look at that. That was a fantastic short sell there. I love buying puts and calls because you're limiting your potential downside and you have unlimited potential upside. But if you can limit your risk, you can never lose more than your premium. I think you're having a great day. Fujitsu, we have not lost much, but we were never really intending on gaining or losing much on that anyways. Look at this, National Bank of Canada, we're already positive. Overall, I'm super happy with where we're at asset-wise, balance sheet-wise. I think we're doing pretty good. I mean, obviously if you ride the commodities train and you just bird it a little bit, you can have way more very quickly. But it just kind of scares me. And in my first video that I made of of Wall Street Raider, I did go bankrupt at least 2, maybe 3 times in the first episode. But I did end that series with like 160 billion after 3 hours. So that's not, I mean, it works. And if you're looking to just, start out with a ton of money, I would suggest doing that. Is there any good targets? Gold is pretty high right now. Would love to sell it. Silver's also really high. Would also love to sell that, but I think I need to get a better feel. Oh, wow, look at this. Oil is crazy low. Okay, well, I did just save. Oil is crazy low. I'm going to buy really super long contracts of that because I don't think it can possibly go much lower. And it's definitely going to go higher. We are going to cash in big time on these contracts. I'm just going heavy. I am not feeling bad about this at all. Okay. We now control like basically 30% of the oil. The oil in the world, if we scroll out here, when is the strike date on these? I can't remember. Oh, September of 2032 is going to be a big month for me, you guys. Wow, look at this. Our National Bank of Canada calls are looking fantastic. The price is all the way up to 58. I could close that out right now, just take some profits. I don't think that'd be so bad. I mean, we're still in the first year of the game, so if you recall, I lost a lot of money, but I've also gained a lot of money. Let's go to, in fact, our research here, and let's see. Annual cash flow, where is it? Less income tax owed now. Yeah, see, I'm still doing good on my annual income tax owed. Oh, actually, I'm going to have to pay them only 333, but that's because I already took a huge loss. Oh my goodness. Look at that. Look at that net worth. Look at the green on that screen, my friends. Yeah, buying oil at $35 a barrel. Turns out, pretty good idea. If you ever have the option, you should probably do that. And now we can just sort of let the oil ride for a little bit, but now we have the cash to go ahead and buy the company that the bank of our dreams, right? Let's just go ahead and do a little safety save. Feeling pretty good about that. And this is cool. You can take a look here. Here we have our commodities on margin. Total assets 29 billion, and year-to-date taxable ordinary income, and we have prepaid that much in income tax. We will actually, let's see, we will owe that much tax in the end. Okay, I can't believe I didn't see this while I was looking at this down here. I apologize. I'm just not used to this new UI. I mean, it's just so fantastic. Look at this. Look at this spike. Crazy. Oil's at 66 and it's like, man, do I take some of the profits? It could just keep going higher. That would be fine because, you know, it'd be really nice is just buying a really big bank right off the bat, right? Where is it? National Bank of Canada. How are you doing, friend? I mean, you were a pretty good looking bank, although, yeah, the equity is so low. I don't think I'd buy it just because of these loans here. It has some really toxic loans to Firestone. Actually, it got better. I'm surprised. That got a lot better. Let's see. What are they paying now? That's not too bad. I mean, but that's still 15% of total assets you have lent to one person. If this went belly up, this bank would immediately be bankrupt, and we'd have the FDIC knocking, although I don't know what the Canadian equivalent of the FDIC is, or the regulators. Let's see. Oh, okay, we are looking at Firestone right now, correct? Yeah, and their earnings per share are looking pretty good. If we go to here, oh, wow. Ooh, overpriced. That's like 500%. I would not be buying that, even if they are making a bunch of money. Let's see. I would not buy that personally. I would sell that if it were me. Ooh, okay. Let's go back to the player. I'm sorry, guys. I'm sorry that I just take random spelunks into random stocks, but I think it's important for you to see me as a person who I'm not an expert, but I've played for a long time. I want you to see how I evaluate when I look at a company, how I evaluate, like, do I want to buy them? Do I not? There's a lot of things I look for. Like, if I'm buying a company, I don't want them to have stocks, because if they own stocks, a stock is an asset that's inherently overvalued price to book, in my opinion. and I'm really hyper focused on that price to book. And so if they own stocks, I don't want to buy them. If they have a higher debt than they have equity, I don't want to buy them. Here, like, let's see, Baxter. I don't own any of it, but look at that. Oh, are they still negative? Let's see. Oh, okay. Oh, Fed ends its stimulative monetary policy. Oh, okay. Let's go ahead and hit pause. The short bond right now is at 1%. The prime rate is super low. This is actually, my friends, the stars have aligned for the perfect moment for us, because now we get to talk about the real toxic assets of the game. We're going to go to the player, we're going to go to finance, and we're going to go to interest rate swaps. And we're going to talk about this, and we're not going to do anything. But here's what an interest rate swap is. I can either take the long or short. We can short a rate or take a long rate. And then there's a notional amount that it's based on. So here's the position: receive a fixed rate. I'm going to short by paying a fixed rate for a long time, and we can base it on, let's see, the prime rate, the short-term rate, or the long gov. It doesn't really matter which one you pick. I'm going to go with the long bond rate because it's so low right now. I am going to pay of the fixed rate of this on this notional amount for as long as they will let me do it. We're going to go 5 years here, and we're just going to offer and see if we can find a counterparty to this swap contract. Let's go ahead and do it, and here we will see we get a counter offer from this bank that instead of this 2.66%, I would have to pay the 5.11% for that over this period on this amount, which means I would basically need the long bond to go over 5% to make this swap profitable. But the profits or the losses are taken out of your account every quarter. So you need to be able to weather massive losses for at least a few quarters. And I would be bankrupt before this swap contract was paying me out. But you get a better deal if you're a bank. So now we need to go find a bank we want to buy, and we're going to do a massive swap contract with that bank because they're going to have even more assets than I have. And with that swap contract, in a couple years, that bank is going to be making a lot of money, and they're not going to have to pay that 5%. They're going to have to pay maybe 4.5%. And you might go, oh, well, that's just 0.5%. It makes a huge difference. So we need to go into search. We are going to go to industry, and we're going to go down to banking. We're going to get rid of that credit rating. We can sort by management. Okay, and we're going to look for a small market cap with good management. Competent. We have one here at 40 billion. Denmark Bank. The book value is 12 billion. My only other question is, okay, this one, the book value is pretty bad. Here, I kind of like this one, but it's getting me a strong sell. And where is Denmark? That's buy. Competent. They have some bonds. Dividend yield, return on equity. Just can ignore that. Let's go ahead and look at Dan M here. We're going to add that. I can actually get rid of this. And let's see. Denmark. I'm going to get rid of that. Let's take a look at their financial situation here. The earnings per share are crazy good. The operating profit, 21 million, so basically nothing. And their cash is, this doesn't quite seem right. Oh, this is such a small bank. Oh, no, wait. Oh, this is a cash flow for a bank. This looks very different. Well, let's take a look at it. The taxable income, they have interest on business loans, there's subprime interest, prime, consumer interest. As you can see, that pays a lot, and they must have a lot in government bonds. So total interest income 3.5. Total expenses, so this is interest they have to pay out on CDs and just bank overhead, is almost 3. So net taxable income 500 million. We would have to pay income tax, and then there's all these after-tax cash flow adjustments like loan repayments. Okay, cash to be reinvested, so this is growth, and quarterly dividend. So that's why we're going to have like a negative cash flow, because the bank is growing. Let's go ahead and look at their total financial disclosure. They own some Baker Hughes bonds. They have a lot in business loans. I'm overall not thrilled with that price, but I think it's kind of one of our few options to buy into the banks, and I do like the name. I think it's pretty good. Let's go back. We're gonna go to, let's see, buy. We're just gonna go ahead and do this. Trim will buy Dan M. Okay. Yes. Do we want to buy it held by the Financial Equities Fund? No, not yet. We're going to go ahead and buy 93% at that price. We're going to pay $44 billion. That's a lot of money, but we're buying a bank, my friends. And now we're going to go back to the player, trade, buy stock. We're going to buy the rest of this from this financial equity. We have to offer them a premium. We're going to go ahead and call it 25%, and they should accept the percentage that we wish to buy. Yes. Okay. Make offer. Make an above market offer. 25%. Wait, let's try 30%. And congratulations. Okay, so we paid 30% over for that last 7%, but that's fine because we now own a bank 100% outright. And let's go to here. We are going to elect me as the CEO. Fantastic. We're getting paid way more money now. We're going to go to the financials. Who's our bank? National Australia Bank. Can we switch? Yeah, we're actually going to switch banks. It won't. Okay, this is confusing. I don't know. I'm hitting this and this is changing, which that doesn't make sense. We're going to go to redeem. No. Okay, let's go to here. We don't have a ton of cash, but we could do something that will increase how much cash we have. And so what we're going to do is go to buy business loans. Let's see. We have a big one in Nokia. That's fine. Do we have any toxic loans? Nothing bad. Oh, and these ones are owned by competing players. We could freeze those loans and call them in, but it doesn't really help me right now. We're not going to do that. We're going to go to buy business loans. Yes. We're going to sort by credit rating. Yes. And if you go up here and you buy these AAA rated credit ratings here with small loans, they're going to come with a lot of cash, right? And that cash will get put into our bank. If you buy their loan, all of a sudden their cash goes to your bank. So let's go ahead and buy this BHP Billiton. Okay. And Mitsubishi, I think I'm okay with that. Yes. I think I'm just going to keep buying them until it won't let me do it. Yes. Yes. Okay. BNSF. Yeah. Okay. We're gonna just keep buying these. It might seem like it's a bad idea, but what we're doing. Oh, no other. Okay. Try again later. They're sick of selling to me. But now let's go back to our financials and take a look. And we have a lot more assets under management. Our equity hasn't changed, but we're going to have a lot more assets under management, which in the end, the higher this number is, essentially the higher your net income is going to be in the end. We have an extra 20 billion in business loans after all of that. And we didn't lose our shirt, but now is a good time for us to go and do the thing that we wanted to do, the whole reason we bought the bank. We are going to go to finance, and where is it? There's a lot more here now. Interest rate swaps. We're going to, okay, they can't do as much as I can. Well, that doesn't seem too fair for them. We're going to go out 5 years. We're going to go on, yeah, we'll do it on the bank prime rate. That just makes it feel more legit too. Let's go ahead and offer. Okay, someone just took me at my rate. Okay. Okay, perfect. So I will be paid, okay, agreed 2.75. The long party will pay the varying interest rate. Okay, wait. I will pay a varying interest rate. No, I took the wrong side of that. Oh, no. Oh, no. Okay, well, now here's where we do the real banky thing, and we just take the exact opposite of that, too. Okay, so let's go back. Interest rate swap. We will do short position, pay the fixed rate for 5 years on the prime rate. Can I increase this at all? No, I can't. Okay. I have a good idea. Okay, the notional value. Okay, they won't let me do it. Okay, here's what I need to do. It's fine. We're going to go to the player. Now we are going to go to finance, capital contribution, contribute cash, and we're going to go and do a like 25. There. Okay. So we just gave a bunch of money to our bank. Now we can go back to our bank. We can go ahead and do a here we go. Now we can do a rate swap. We can do a short position. Our notional amount possible went up because the equity of the bank went up. And now we can go short this interest rate for 5 years. Okay, they won't let me do it. Okay, not to exceed 252. Okay, fine. Let's do that. Finance, rate swap, short, 252, 1, 2, 3. Okay, for 5 years. And let's offer it. Okay, now that's 5.2%. Well, I feel like I just got ripped off. Okay. Well, these interest rate swaps are going to be the death of this bank. But overall, whatever. It's fine, you guys. It's totally fine. Do we want to redeem any of our bonds? Let's go ahead. Let's take a look. When are these bonds due? 2045. Oh, and they're cheap. We don't want to redeem those. We want to let that baby ride for a long time. Okay, yeah. And our capitalization went up a lot. So what if we go to the player and take a look at our holdings? Where are we at? Where are we at on our Unit Denmark corp bonds? No. Oh, we are looking at where is it? Where is here my stock? Oh, we're actually up a pretty penny on that P&L. Okay. Well, that's kind of wild. Look at that. Our cost basis versus market value on this bank. What are we doing? Let's go, and we are going to do an IPO. Where is it? Public offering. 50 million. Sure, that's fine. I don't care. We're going back to the player. We're going to sell this stock. Yes, 80%. We just made a ton of money. Holy cow. Do you guys see that? I just made a crazy amount of money. Whoa, dudes. Everything is coming up trim right now. We're at a net worth of 150 billion. Okay, so raising that money just drastically improved the balance sheet of that bank. Unidanmark now looks like a way more safe bank. And so if you're a stock, like if you're just a normie buying stock, you would much rather have a bank that was like not teetering on the edge of solvency. And so apparently people love it now, which is great for me. I just made a crazy amount of money. I'm just going to completely forget that ever happened. It is no longer my problem. We are just sitting so well. I can't even believe that just happened. Wow, my net worth has increased for 6 consecutive months and has grown 11,462% in the last 6 months. Boy, oh boy. Oil, do we want to, it looks like it's sort of like evened out here. Do we want to go ahead and close out some of those? I won't close all of them out, or maybe I should. Maybe I should. Maybe I'll just do 2 of them and just sort of lock in some of those profits. I think that's probably not a bad idea. There we go. We can close out this call on the National Bank of Canada, the little 10% call I made. We came out pretty good on that too. So we had that brutal, painful initial loss of almost half our capital, but then now here we are. We're not even to the end of the year, and look at this. Look at this, friends. From 1 to 150 in a single year. And it didn't even all come from commodities. I mean, I just made a bonkers amount of money on just turning that bank around, and I'm not even sure what I did. We didn't even get to the fun parts of a bank. Now we need to find ourselves a new one. So let's go back to, I guess I don't need that anymore. Let's go back to the research, back to banking, and let's just find one with a really small market cap. Let's see. Canadian Imperial. Yeah, I think I kind of like that. Let's go ahead and check it out. We have a bunch of money now, but it's sitting pretty small. Oh, you know what I need to do? I think I need to unlock the denominations. That might there we go. That fixes this money here. I was wondering why these graphs weren't working. It's because I screwed it up by locking it when they were much smaller, when they were all zeros. Okay, let's go ahead and take a look at the financials of this company. Whoa, it looks big. Look at that equity. Look at that stock cap. And now let's look at total assets. Okay, well, it's actually not as big as I thought. Okay, that's pretty good. It looks like we're going to earn a crazy amount this year. Wow, what is going on with that? Did they sell some stuff? I'm not even really sure. But I think now would be a good time. If we go to overview, I think I just want to buy it. Worst case scenario, we lose 50 billion and we're still rich as heck. So let's go ahead and buy CM. Okay, perfect. We're gonna pay, oh, we can get 100% of it right away. We don't have to pay anybody anything extra. And for 35 billion, we took care of it. We just lost 7 right there, right off the bat. But that's okay. We're gonna figure this out. Let's go to the financials. Let's go to the loans, and we're gonna go over here to our set allocations. And so here you can set up the bank asset allocation strategy. And so you can turn it off to, You can also turn off button on the next screen to turn off automatic allocation, in which case you must make all asset purchases. Not ideal. It's a lot of work. We're not going to do that right away, but you have to keep cash equivalents. Now take a look. Here we are. Here we can set how much we want the bank to automatically allocate to these different things. Cash and equivalents we have to keep at 10. But bonds, not great. Look at the interest rate we'd be getting on bonds right now. It's sort of garbage. So I want to actually get rid of 10% of that, and we're going to add it in. We're going to add 5% onto our subprime mortgages, and we're going to add 5% onto our consumer loans, so that we are going to be, come on, recalculate. Why did it, okay, 32. There we go. Now we're at 100%. Now we are going to, the bank will automatically, this asset allocation implementation will be slow, and some actions that would appear to be disastrous, such as selling bonds when interest rates are high, or buying or selling subprime mortgage securities at a loss during a crisis, may not occur in accordance with your allocation strategy. So basically, it's going to slowly move all the bank's assets into my new allocation strategy without bankrupting us. That is the dream anyways. Now look at our equity. It's so bad, right? And here's our total stock cap. Let's go to the player. Let's just do the same thing. Let's go ahead and capital contribute. Cash, we're going to go... shoot, I mean, we're already 30 bills in. Let's add another 30 bills. And so now if we go to our player holdings, where is it? We are 65 billion into the cost basis. But now I think the bank's going to be a lot more attractive as a potential target for the future. And I think I want to turn around and go ahead and do a, let's see, what is it? What is it that we're here to do? That's right. We're going to go and do a rate swap. We're going to do it correct this time. We're going to go, it doesn't matter. I think we'll do bank prime. We will do short position. And let's do 4 years instead of 5 and see if we get a better rate. And it's saying 6.25. Oh, it looks like rates have shot up. Okay, no, I want to do it on the short bond instead, because the short bond hasn't adjusted much. We're going to go ahead and do it for 5 years. Let's check out, see what we get. Ah, yes, this is much better. The short bond moves around a lot faster. I like this. So, for 5 years, we will be paying 3.76% on the notional amount of $400 billion. And the counterparty, Aetna US Healthcare, is going to be paying me the floating rate, the variable rate. And here you can see, due to the... Oh, so this does not reflect the courtesy discount due to the very low rate. So I just am bite the bullet anyways. But I think this is a good deal for us, because worst case scenario, whatever, we lose a little bit of money. Best case scenario, whatever, dude, we're cashing in mega huge checks. And this, I'm serious. I've had interest rate swaps in the past where I've been getting paid like over 100 billion per quarter. And at that point, you really start to snowball. But here we are. We still have 80 billion in cash personally, and we have a bank. We own a bank, the Canadian Imperial Bank, and it sounds really fancy. And I'm feeling really good about it. But we haven't completed our total, financial empire yet. But I think it's probably best if we do that in our next episode, because I think we've accomplished a lot today. I showed you guys a little bit, the first little inklings of how the game works, how you can buy and sell shares, how you can find some good targets for shorting, how to limit your losses by doing options instead of buying outright or shorting outright. And we did some commodities trading and some bank buying and selling that turned into like huge cash cows. And so we are now almost a full year in. Let's just take it to the end of the year. We'll see where we end up on January 1st. I am excited. But overall, I mean, we have had a fantastic, like just mind-bogglingly great year. I don't know what's going on over here. Here. There's something weird going on here. We'll check on that later. But overall, we have had just an incredible year. I'm going to be the CEO of yeah, I just is this like my 5th job this year? We've had an incredible year, and I hope you guys have enjoyed this episode so far. I hope you have a good idea of what it takes to start a financial empire. Just mostly get lucky and start with $1 billion. But I want to talk about our next steps too. Next, we're going to be buying an insurance company. I think we're going to do that next time. We'll set up a holding company for all of our future shenanigans and industry roll-ups. And I think we will probably be trying to acquire more and more bank assets as we go. Because if you take a look, our total assets under management is not fantastic. We're at 320 billion, right? Now, if we go look at some of the other banks, if we go back and here and back here and take a look at our heat map, JP Morgan Chase here. What's their assets under management? It's much larger. And this, my friends, this is where we need to be to consider ourselves successful. If you're if you don't privately own JP Morgan Chase, what are you even doing with your life? And on that note, my friends, if you appreciated this video, please make sure you leave a like down below. It's super helpful for me, and it will help other people find this video, which they might need if they want to become rich. And if you enjoy my content, make sure you check out the other Wall Street Raider videos on my channel. Those would be super helpful for you too. Make sure you hit that subscribe button. It helps me out. And frankly, I can't even find my subscriptions on my YouTube app anymore. So I think they're kind of pointless other than you can help me out. And if you really like me, you can hit that hype button. I suppose that helps too. And of course, leave your comments down below. I'd love to hear what you have to say. I'd love to hear what you think of the video. If you have any questions, I'm happy to help you out. And of course, you should definitely check out the Wall Street Raider Discord. There's lots of great people on there who can help you out as well, give you tips, tell you what I do that is wrong, which is many things. And I would love to see you and talk to you guys there. And on that note, my friends, I have been Trimbark Tree, and I will see you in the next one.